I know, I know. You want to hear about the Topstep bombshell, and trust me, we're getting there. But first, you're going to want to hear this story about trades by Matt. It starts like a typical trading update, a few charts, some clean executions, but then takes a turn no one saw coming. And hang in there till the end, because there's a big surprise waiting. Let's get into it. Okay, let's talk about trades by Matt. Because apparently, while the rest of us were still arguing over whether one funded account is too stressful, this man woke up on Wednesday and said, you know what sounds fun? Passing 300K accounts today. And he did, in one day, 10 contracts per account. Boom, $21,000 per account later. We're just casually redefining lightweight, baby.
Woo! Lightweight, yeah, buddy. Lightweight, baby. Lightweight. Woo! Lightweight. Lightweight, baby.
Now, if you've been following Matt through his 50K journey, you know this is a major pivot. He'd been chipping away at those 50K accounts with the kind of consistency that makes accountants cry tears of joy. But after burning through most of his 50K margin, he didn't rage quit. No, he rage evolved. Why? Because sometimes the apex throne calls and you don't ignore a royal summons.
Remember, this is the same guy who, before Kane, Manbir, and JadeCap were posting payouts like vacation photos, Matt quietly flipped a few $1,000 into $309,000 in payouts in broad daylight. Apex tuned in like, wow, I wonder how this one ends. Spoiler, he got his money. And honestly, if Apex could break open the multiverse and pick a different timeline, they'd probably go back and stop Matt from passing those first 20 accounts. Meanwhile, in our current universe, they're Googling how to freeze payouts in a legally gray area. Matt doesn't always get the credit he deserves, and let's be real. He was the Johnny Appleseed of trader inspiration, tossing out hope like he was planting apple trees across the frontier.
At the time, that kind of payout was unheard of. No one had even dreamed of numbers that big, let alone caught it live on stream. But that run, it cracked open the ceiling. It made traders like JadeCap and Manbir go, hold up, you can do that? So, yeah, before the $1 million payouts and Apex leaderboard arms races, Matt was already out here building the staircase everyone else climbed. One base hit at a time.
That's right. He copy traded 20 accounts. $400 a day for each account, day after day after day, which sounds small until you realize that's an $8,000 day. That's enough to buy 20 more evals and dinner at Chipotle with extra guac and queso. And the discipline? Immaculate. He didn't try to moonshot. He did base hits. Daily $400, payout every 10 trading days. He was basically the Swiss watch of retail traders. He even kept $1,500 in each account to protect against Apex's consistency and drawdown rules. Because this man plans for success like it's a military op.
Now, it wasn't all champagne and Wolf of Wall Street montages.
1, 2, 3!
Mid-run, Apex randomly banned DCA. Matt unknowingly broke the rule and got his payout denied. That's the prop firm equivalent of getting pulled over for a speed limit they changed after you passed the sign.
But instead of crying into his keyboard, he adapted. He went full bracket orders, set hard stops, started respecting invalidation like it was a court order. And the result? Better entries, better exits, and fewer, oops, all losses days. But even Matt's not immune to tilt. After 85 days of print-perfect trading, market volatility smacked him in the ding-ding with 3 consecutive red days. And boom, all 20 accounts were gone. All of them. That's like spending 3 months building a house just to have the market drive a monster truck through it. And now, he's back.
In the first quarter of 2025, Matt's already clocked $80,000 in payouts. Quietly, respectfully. And the setups? Still tight. He's not chasing the market. He's letting the initial balance retest do the flirting. He's got wick reversals, candle confirmations, and emotional clarity like a Zen monk with a futures contract. And while the rest of FinTwit was pocket-watching and comparing payouts like Fantasy League stats, Matt took a break from the numbers game. Because he didn't want to flex. He wanted to teach. He's back now with videos that actually explain how to stay consistent when your dopamine says, you're on fire, keep going. Oh, and did I mention he's building a new platform? Tradester.com. It's not a prop firm. It's not a rebrand. It's his actual attempt to go toe-to-toe with Sierra, Quant Tower, and every charting platform that ever made you cry during NFP.
So yeah, if you're wondering whether this is a subtle play for the Apex leaderboard, let's just say Matt didn't say he's coming for the crown, but his results are already waving at it from across the room. And just as he's scaling 20 high-cap accounts and launching a new trading platform, he also welcomed his third baby on Friday morning. So Matt, from all of us, congrats on the accounts, congrats on the platform, and most importantly, congrats on the baby. We see the growth. We respect the grind. And if Apex has another leaderboard shakeup, we know whose name we're betting on. And Matt, before we move on, how about a few of those legendary dad jokes? With 3 kids, he's basically legally required to tell them, here to make us laugh and groan. It's Trades by Matt.
What noise does a 747 make when it bounces? Boing, boing, boing. Why did the coach put the frog in the outfield? He's really good at catching flies. What do you call someone with no body and no nose? Nobody knows. Rest in peace, boiled water. You will be missed.
We launched something big, and you noticed. Thank you all for the incredible response to our new website, futuresforourfuture.com. The feedback has been overwhelming, and we're just getting started. You asked for book recommendations, so we delivered. Check out our brand new section featuring the trading, money, and mindset books that shaped how we think and trade. Also, under our Compare section, we've made it even easier to find the right prop firm for you. We have Compare Prop Firms, Compare Payouts, and now, brand new, Compare Rules. Can you trade the news? Hedge your position? DCA or scalp? All those answers, sorted by evaluation or funded account, are just a click away. And if you're looking for the best deal this week, Tradeify's $50,000 account is just $97 out the door. Yeah, we couldn't believe it either. Come see what the hype is about. Visit futuresforourfuture.com and trade smarter today.
All right, traders, no need to grab your tinfoil hats. Seriously, let's have a calm, rational conversation about Michael Patak's brilliant new idea, creating an SRO. That's a self-regulatory organization, run entirely by prop firm CEOs. Patak says he wants to bring structure to the industry, which, okay, the same way a prison brings structure to your free time. And in a February post on X, he actually said, and I'm quoting here, "We're working with other CEOs to squash hedging across firms." Oh, so it's not just about rules, it's about surveillance. We're not talking SEC oversight, we're talking Panopticon Futures Edition. If you don't know what that is, Google it. It's a psychological nightmare, a prison design where you never know if you're being watched, so you act like you always are. Sound familiar? Yeah. It's like the Truman Show. But instead of Jim Carrey, you've got Michael Patak.
But here's where it gets better or worse. Depends how many prop firms you're juggling. Because while Patak's out here assembling the Justice League of Profit Suppression, he kind of forgot to mention that Topstep X, their shiny new platform, is just a white label version of Project X. And guess who runs Project X? Former Topstep staff. Cute, right? So what's included in Project X? Something called cross-firm risk monitoring. Translation: if you're trading with firm A and firm B at the same time, both firms get notified automatically, like a tattletale with Wi-Fi. So when Kellyanne dubbed the platform Snitch X, yeah, that wasn't an insult. That was an accurate product review.
So to recap, prop firms want to create a self-regulatory body that they control while quietly sharing your trading data behind the scenes. That's not a conspiracy theory. That's a connect-the-dots puzzle so simple, even Dakota could solve it. But he won't. Because thinking for yourself isn't exactly part of the training manual over at Topstep. Okay, deep breath. Let's talk about prop firms. Specifically, who regulates them? Oh, that's easy. No one. Well, not technically no one, but basically no one. Especially the kind you and I deal with, the retail evaluation model prop firms. You know, the ones that promise you can get funded if you pass a test in a video game version of the futures market.
Let's break this down. Institutional prop firms, like Jane Street or DRW, those are regulated. They trade their own capital. Their traders are employees. They file with the CFTC. They show up to compliance meetings wearing suits and emotional repression. Real finance stuff. But the retail firms, the ones selling you $150 evaluations and putting your trades on a leaderboard like it's Call of Duty, funded ops? Yeah, they're not regulated because they figured out a magical loophole. They don't trade your money. They don't let you trade your own money. They give you a fake account in a fake environment with fake leverage. And then they say, if you win the simulation, we'll give you access to our real capital. But we'll still own the account, control the payouts, and revoke it the second you sneeze wrong. And since that entire process happens in simulated trades, they get to slap a sticker on it that says, for educational purposes only, like it's a Sesame Street segment on how to blow out your stop loss.
And that, my friends, is how they avoid CFTC oversight. Because the CFTC regulates real trades. They care about brokers, exchanges, customer funds, you know, the actual grown-up stuff. Now, don't get me wrong. If a prop firm flat out lies, misuses customer data, or sells your account to a Nigerian prince, the CFTC can step in. Or the FTC, or possibly Batman, depending on who gets there first. But until then, most of these firms operate in a legal gray area the size of Texas. And some of them like it that way. In fact, some firms have voluntarily revoked their NFA membership. Why? Because the moment you're regulated, you can't do things like hide your refund policy behind a 37-click maze of support tickets and broken links.
Okay, I hear you. Regulation talk is boring. You just want to get back to your Chuck E. Cheese arcade, load up on tokens, and slap buttons until your account is empty. And trust me, the prop firm CEOs want that for you too. That's the dream. But here's the twist. Some traders have already figured it out. The ticket-eating robot has malfunctioned. The toys and prizes you were promised? Yeah, turns out they're just empty boxes. So here's the breakdown. You've probably heard of the SEC and FINRA, right? They're the guys who show up when your stockbroker does something shady, like tossing your retirement into a meme coin and calling it aggressive growth. But what about futures trading? Who's keeping an eye on that chaotic casino?
Enter the CFTC. That's the Commodity Futures Trading Commission, the unsung heroes of regulating things nobody fully understands, like pork belly contracts and hurricane insurance swaps. Yeah, futures regulation is basically the WITSEC of finance. It's real, it's important, and nobody outside the industry knows what the hell it is. And just like the SEC has FINRA, the CFTC has its own sidekick, the NFA, the National Futures Association, which sounds like a high school booster club but actually keeps brokers from committing war crimes with your margin account. And guess what the NFA is? That's right, an SRO, a self-regulatory organization. You know the thing Michael Patak wants to invent? Yeah, it already exists. So we will wrap this up with a fun question. Why would retail prop firms want to start their own SRO when one already exists? Because the NFA does something terrifying. It holds prop firms accountable. Can you imagine? If retail prop firms joined the NFA, they'd have to, disclose risks, stop lying about payouts, and maybe refund people when they rug pull a payout for breaking the consistency. And that's not the dream.
The dream is to look just regulated enough to build trust, without actually being regulated, which is why they want to start their own SRO. Because if you're the one making the rules, you can make sure those rules say, no cheating, unless it's profitable. This isn't about ethics. This is about optics. They want to slap a gold badge on their homepage that says, we're self-regulated, while privately agreeing to do absolutely nothing about predatory rules, surprise resets, or $10,000 payouts that somehow take 45 days to clear and still get denied. Starting your own SRO when one already exists is like launching your own FDA, but only to approve the experimental energy drink you made in your garage using Red Bull, NyQuil, and melted down Topstep contracts. So yeah, we do already have an SRO. It's called the NFA, and it's legit. But legit is hard, so instead they're building a fake SRO to protect themselves from a real one. And that, my friends, is what we call a regulatory cosplay fantasy.
Do you love funny memes? Like this, or even this? Yeah, we do too. If that's your vibe, come hang with us on X and Instagram. Links are in the show notes. We drop fresh, hilarious content every single day. And hey, if you've already followed us, thank you so much. If not, please consider it. And now, back to the show.
Viewer discretion advised, but not really. The following segment includes references to Donald J. Trump. Not an endorsement, not a condemnation, just a reminder that futures traders survived a 100-day hurricane in a red tie. If political content gives you heartburn, now's the time to tighten your stop loss and grab a bipartisan pillow. Relax. It's just jokes, mostly. Kind of. Anyway, you were warned.
The most successful 100 days in the history of our country.
Donald Trump said his first 100 days in office were the most successful in history. You hear that? In history. Like he discovered electricity, cured cancer, and invented ranch dressing all in the same week. Guess what? He did not.
Chaos and confusion from Wall Street to Washington.
More than $6 trillion in market losses. Consumer confidence plummeting.
Outrage over Musk and his Department of Government Efficiency.
The showdown has legal scholars afraid that this might actually be a constitutional crisis.
Firestorm over the national security breach.
The Russia-Ukraine war raging on.
Just 39% of Americans approve of the way Trump is doing his job. Lower than any past president at the 100-day mark.
He has the lowest approval rating of any president in the past 80 years.
What he did do was light the American economy on fire, put it in a shopping cart, roll it down a hill, and then call it strategic leverage. Strategic leverage is what I call it when I forget to pay my credit card bill and ignore the calls from Capital One.
Let's talk numbers. In the first 100 days alone, the markets lost over $6 trillion. That's trillion, with a T, as in Trump, as in totally tanked the economy. In consumer confidence, Yeah, that fell harder than Rudy Giuliani at a press conference outside a landscaping company. It's like every American looked at the future and said, you know what? I'll just stay here in the fetal position. But guess who did make money? Trump. His net worth doubled. Doubled! While the rest of us are comparison shopping for eggs like it's Sotheby's. Sorry about your 401k, but I just made $40 million off a Melania documentary no one asked for. You're welcome.
And let's not forget his totally chilled trade war with, well, the entire planet. Trump waltzed into office, slapped tariffs on both allies and enemies, and when asked why he blindsided the global economy, he shrugged and called it game theory. Because nothing says Nobel-level economics like playing Uno with nukes. China, by the way, was not amused. They clapped back by cutting us off from rare earth minerals, which sounds like the plot of Avengers Endgame, but really just means we can't build anything cooler than a wind-up toy. Literally, we have no magnets. So our biggest military-industrial complex threat is now a refrigerator door. You see, without neodymium, we can't build electric motors. Without electric motors, we can't build cars. And without cars, how are we supposed to block the neighbor's driveway in passive-aggressive protest?
But honestly, who cares about politics, right? Well, as traders, we all do. Sure, we like to pretend we're pure technical analysts, reading charts like ancient scrolls. But with Trump in office, we're all news traders now. Trading during Trump's first 100 days was like dealing with the weather. If you didn't like it, wait 5 minutes. He'd fire off a Truth Social post and boom, the market would rocket 1,000 points in the opposite direction. At least he was kind enough to give us a heads up. Yep, he actually posted on Truth Social, "This is a great time to buy. DJT." No explanation, no context, just full caps chaos, signed off like he's autographing the Constitution with a Sharpie. Then, and this is where it gets wild, just a few hours later, he announces a 90-day pause on nearly all tariffs. And the market? It took off like it just heard a Tony Robbins keynote while shotgunning a can of Mountain Dew.
So, how did Trump's first 100 days play out for our fellow traders? Well, it was historic. Manbir kicked things off with a jaw-dropping $2.46 million in payouts from Apex. Then JadeCap, real name Kyle, followed with an even bigger haul, $2.55 million. That's over $5 million between them cleared and confirmed. These weren't just payouts. They were a message, a flex, a turning point. In a world where everyone's questioning if funded trading is still legit, these two just dropped the mic. But not everyone had a fairy tale ending. Connor T., at Felony Trades, posted on X that he lost $840,000 in a single day, just 4 days before he could request a $1.4 million payout. "I haven't tilted this hard in years," he wrote, describing how a single mistake spiraled from plus $5,000 at the open to a massive wipeout. And rips at selling rips? He lost his Apex PA accounts live on stream after longing the exact top of the market. Friday's final P&L, minus $103,159. He ended the post with a brutal confession. "I have not been able to figure out this market for months."
So yes, Donald Trump's second first 100 days were historic. In the way that the Titanic is historic. Lots of noise, lots of wealth, and then, boom, the iceberg hits back. Because that's what this market's been. Cold, unforgiving, and perfectly timed to punish overconfidence. For every trader cashing $1 million check, there's another staring at a blown account wondering what just happened. This isn't just volatility, it's financial whiplash. And if Trump's return was supposed to bring market clarity, let's just say, the only thing clear is that we should all be on Truth Social. So we're ready to front-run the rally the next time he even hints at buying.
America is going to be very rich again, and it's going to happen very quickly.
I think our economy is going to roar. I think our stock market's going to do great.
When I win the election, we will immediately begin a brand new Trump economic boom. It'll be a boom.
Thanks so much for watching. If you enjoyed this episode, click here to check out another great video or explore our full playlist for more. Watch time means the world to us, so please share this with your trading buddies. And if you don't have any, just watch it again yourself. Remember, trading is tough enough. We all deserve more laughs. Thanks again, and see you next week.